Welcome to a new episode of the All Good Things with BBB podcast. This podcast is designed to help you be a better business, and today is no exception. I'm interviewing Chelsea Williams, who owns Money Mastery out of Bloomington, Illinois, and Core Solutions Group, and she is a money mastery brain, I tell you. She's so easy to talk to and gives you lots of great advice about how to manage your personal finances and your business finances for profitability. So come on in. I guarantee you're going to learn something. All Good Things with BBB helps you be a better business. Thanks for joining us on another episode of All Good Things with BBB. Our guest today, Chelsea Williams of Core Solutions Group and Money Mastery, right out of Bloomington, Illinois. She loves dogs and plants. And have you been to AB Hatchery?
I have, yes.
All of their fun plants.
Yes.
So speaking of green, we're going to talk to all things with Chelsea about money today and how to manage your business for success. Times are really tough right now. And even without tough times, you know, the majority of businesses fail within first 5 years. They don't know how to manage it. So I'm really glad you're here today to talk about how to navigate these normal challenges and then these kind of irregular challenges that we're seeing in the economy today. So first, let's start with, tell us about what Money Mastery does and Core Solutions does today.
Yeah, sure. Thanks for having me. By the way, this is a really fun experience. I'm happy to be here. Core Solutions Group was my first company. I started in 2017 when I was 7 months pregnant. And that business niches. I knew I wanted to niche, you know, the saying, get rich in a niche. I think there's a lot of value to being a master of few instead of a jack of all trades. So that's what I did. And that company serves law firms across the U.S., offering things like bookkeeping, payroll, fractional CFO services.
Okay.
And then a few years later, I started my passion project. So it really wasn't about the money for me. And I started Money Mastery. And that company does all of the same things, but not just for law firms and not just with business finance. I help people with their personal finances as well, because how you manage business finance when you're the owner is how you manage personal finance. So I was able to marry the two and bridge it under that brand. And that's where my heart project is now.
Yeah. And that's so great because your philosophy is to become the CFO, even if you're not one. You teach people how to do that. And then also mastering your own personal finances can help save your business as well.
Yes.
So what are some of the parts of business success that you feel are most critical?
Well, obviously I'm going to say money. Right. Obviously money. And the second piece for me is be aware of what you don't know. You don't know what you don't know. And for a business owner, our businesses are only going to thrive as much as we are willing to look in the mirror and challenge ourselves and learn new things. There is no such place as complacency for business owners. At least there shouldn't be, because when there is, that's how we die. People go out of business. So I think those are two really big things. And the money is fun for me because for me, money is a mirror. It tells a story about your business, about every facet of your business. I can see and get an idea of everything that a business is going through by just looking at some numbers. And so by learning numbers and the language of accounting, because Warren Buffett famously said, accounting is the language of business. And so as a business owner, we need to learn this language. Because to some degree, we all start a business for reasons rooted in time and money. And all we're buying with our money is that time. So it would make sense that we would want to learn how to speak that language and how to leverage our numbers.
Sure. What are some of the in those first couple of years of businesses, what are the mistakes that you think most business owners make when it comes to finances?
I think there's a huge money myth out there that's costing us a lot. And it is that you have to spend money to make money. It's largely false. Unless you're in something like construction or a business like that where you have to buy these big assets. But even still, a lot of times we think that we have to have this giant, grand $10,000 website, for example, to be able to even start selling. And I think that's what gets a lot of business owners in a lot of trouble, is that thinking we have to spend money on all of these things instead of kind of getting creative, looking outside the box. It's never a lack of resources. It's always a lack of resourcefulness. What can you do that's not going to cost you as much? Do you actually have to have that thing to get your first few customers to be able to actually afford it without putting yourself in a cash crunch? Right? So I think that's one of the big things.
Yeah. What is your money philosophy for business? I guess let's go back to that.
Money is very rarely a cookie cutter answer. I think it's important to know what you want out of your business money and also what's enough. I don't think enough of us ask that question of ourselves. Like, what is actually enough money? What's actually going to make you happy? And what does that lifestyle look like, and how can we quantify that?
That's huge. That's huge. Otherwise, you might be running this race toward an end game you're not even defining.
Yes.
And burning out.
Yeah. Yeah. Because, more money is rarely the answer in my experience. And there is no such thing as money problems. There are only ever problems showing up in your money. And so being able to really conquer those and see those, and that's where like the self-growth comes in. Like, it's always and never about the money. And to fix anything in your money life, you actually have to look in the mirror and fix what you believe or what you're doing.
What are some things that you see in businesses that they have to fix?
Well, let's start with, I think we're going to get into what I call the universal equation eventually, right? And the universal equation is what everybody's living in. You're living in it. I'm living in it. A business is living in it. Big, huge corporations. Everybody lives in this equation. And that is how much money we make minus how much money we spend equals how much money we keep. Mm-hmm. The problem with most of us is that we have a net zero keep. We're spending everything we make. But when it comes to those limiting beliefs, the first part of the equation, money we make, it usually always boils down to self-worth. Not charging enough is something that I see a lot of. And if you go 3 layers deep, I call it go 3 layers deep and ask yourself why, and answer why 3 times. Why aren't you charging enough? And why is that? And why is that? Usually by the 3rd time you get to a core belief. And so a lot of them are revolving around, I am not deserving of that much money. That feels like too much money to me. I feel uncomfortable asking for that much money. Or even collecting money. If you have invoices that people pay over time, a lot of times I'll see business owners that have this huge accounts receivable. Like they need $30,000 to cover payroll and they got $75,000 that people owe them over here, and that boils down to sometimes I don't want to ask for that money. It feels icky to ask for that, and things like that. So,
wow, that's a great example of the personal mindset affecting the bottom line.
Mm-hmm. Yeah.
My goodness. The great news is all these things can be fixed.
Absolutely. Absolutely. And the best news is most of your money problems can be fixed with automated systems. I think systems can be scapegoats for our subconscious mind that will sabotage us. Setting up automations, leveraging software can make these things automatic to where we get to blame our systems. Like, oh, my system was following up on that invoice. Yes, we do need you to pay that.
Yeah, I think that's the other part of that trust, is that you did the work and the customer agreed to pay you. And that's really not an uncomfortable situation for the business owner. This is how we do this business.
Yeah.
That's how we do tomorrow.
Yes.
Yeah. Being comfortable with that. Tell us about the process of shifting the money mindset.
It starts with recognizing that over 50% of your core values and beliefs around money and everything else in life is established by age 7. So from 0 to 7, we are living and operating largely in our subconscious mind. We're not actually aware of the present moment and where we're at. We're a sponge. We're absorbing the things we see from the people around us, the things we hear. And then at age 7, our brain starts operating in now our conscious mind. And when we move to our conscious mind, we bring with us those beliefs and values that were imprinted on us. They call this the imprint period. This is largely researched. And so when it comes to money, a lot of us experience family dynamics around money. We were told things around money. We observe things from social media, TV, things that we hear. A lot of it is wrong. And a lot of it doesn't serve us in our adulthood, but we take them with us anyway. So like for me, I grew up and I'm a daddy's girl, and my dad was a truck driver for 14 years and he worked long hours. Like my favorite time of the day was 4 a.m. when my dad would wake me up for oatmeal before he went to work, and then he'd put me back to bed. And he wouldn't be there until nighttime to read me a book and put me back to bed.
Right.
And so when I grew up, I had just established this belief that like you have to hustle, bust your butt, sacrifice time with the people that you love the most so that you could provide and work these long hours. Like you really had to sacrifice. And even still, we were like middle class America. We were not like well off. So that's a belief that I had to really observe myself. So we all take these with us. We all have this experience from childhood. Yeah. And I think that's where it starts, because that's what's going to subconsciously hold you back. And you're not going to know why.
Do you think a lot of people, going back to your example of the invoicing problem, do you think a lot of people struggle with the guilt of changing the mindset of that I don't have to work all these hours? I could work less. How does that go?
Yes, I would say the biggest feeling that people have around money in general is guilt. And for a lot of different reasons. Some of us are taught that money is the root of all evil. Having too much money is wrong and bad. Rich people are bad people. Mm-hmm. And a lot of the guilt comes from we're out here adulting and we don't know how to manage our money. That makes me feel ashamed and guilty. Right? But what I like to bring to people's attention is that nobody's teaching us. Financial literacy is not a requirement in most states. I think there's 1 or 2 states that require financial literacy. I have a college degree around finance, and it did not cover personal financial literacy well enough. And so I like to bring that to people's attention because that is your permission to stop feeling guilty about not knowing how to budget, how to manage debt, what you should spend money, what you shouldn't spend money on, how to invest, how to save for your kids' college, all of the things that is required of our money that we're feeling confused about.
Yeah, that's freeing. It really is. It really is. And then you can focus on the habits that you need to run your business successfully and have it work for you instead of you. What are the key indicators you see as a healthy business?
Yes, so there are 2. And it's funny because most people focus on the wrong one. So most people focus on how much money they're making, the top part of that universal equation, and that's their goal. And they're like, yes, I made double in revenue this month. But
I tripled my expenses.
Yes, exactly. I just met with a business owner who's bringing in $7 million a year. And you hear that number and you would think, woo, that person is living great. Like they probably have a nice car. They fly private jets. They had 1 bad month. The owner had to skip a paycheck and take out a loan to cover payroll.
Oops.
More revenue is rarely the problem. Keeping more of what we make, the bottom part of that equation, is what matters the most.
Yeah.
And for a business owner, that number is on your income statement or your profit and loss, and it is your net income right at the bottom. So I would say that is the most important number because more or less, that's what you're able to keep.
Gotcha.
Okay. The second most important number is your net cash flow. So there is a difference between your net income on your income statement and your cash flow. And I think this is one of the biggest points of confusion for business owners. Your net income is what you're taxed on. But there are things, because your income statement is basically taxable revenue minus tax deductible expenses. Not all of your expenses are tax deductible. Things like principal payments to loans, right? Owner draw or owner distribution. Those are not tax deductible, but they absolutely come out of your bank account. Cash flow is that number that will account for all of those items to tell you how much actual cash you retained.
How often do you recommend they look at
Monthly.
Those?
Monthly.
How many months, do you, before you panic, if those numbers are in the red?
That's
Cash
a good
flow,
question.
obviously, right away.
Yeah. And this is where knowing your business and being in tune with your business matters. And so if you're one of those people listening to this and you have a fear of even looking at your financials, which is a very common thing, it's okay. Just start looking at them. Even if you feel unsure, uncertain for 3 months, 6 months, just keep coming back. Because eventually your eyes will get used to looking, your brain will get used to digesting, you'll start asking really good questions. And if you have the right financial players on your team, they will help you answer those questions so that you will know things like, I can operate in the red for 3 months and I'm still okay. Right. And that's kind of where cash management comes into place, which is different than anything we've talked about yet, is knowing how to manage your actual cash in bank matters.
Yeah, I see a lot of businesses getting excited about a great season and maybe not putting some of that away in reserves. What is your recommendation for cash reserves?
There is a book called Profit First by Mike Michalowicz. When I first read this book, my mind was blown because I was already using this system in my personal financial life. It's basically the New Age envelope system. Some of us know about the envelope system, right? Where
Cash it out.
we used to get paid in cash and mom and dad would lay the envelopes out on the kitchen table when they brought their check home or their cash from their job. And the first priority was rent or mortgage. Like, we need a place to stay. That's most important. We're going to put cash in that envelope. Next, we need to eat. So I'm going to fill my grocery envelope, make sure that cash is protected so that we can eat, and so on and so forth. And so what this is it's like a new age envelope system where businesses use multiple bank accounts to allocate their cash. And when you use this system, it's all based off of how much revenue you make. So all your revenue goes into one separate account. And if you have a really good month, naturally, it's going to pad all of your other bank accounts. It's going to set aside more for your operating expenses, more for payroll and your team expenses. It's going to set aside for tax because you're going to owe more if you make more and keep more, right? So it's almost like cash management on autopilot. I would recommend it to everyone. And I use it in my personal finance framework as well.
Nice. And so do you have that automation built in when it reaches a certain threshold to auto transfer to the other accounts to make it easy, or is it more manual?
It's a percentage-based system. And so typically we'll have just an Excel calculator.
Gotcha.
That'll help you know how much to transfer. Some businesses transfer weekly. They like that cadence. Ideally, like the book will tell you, transfer every other week. I think it's fun to challenge yourself and do once a month transfers. See if you can manage your cash so well and be intuitive with your spending so well that you only have to log into your bank accounts once a month. And for some business owners listening to that right now, they're like, what? Like, I log into my bank account every day on my app and I'm doing math in my head. And, you know, once a month, that's scary, but you can get there.
Yeah.
The system allows you to do that.
Nice. That's cool. I think going back to the reality. So with that in mind, how do you feel about debt for businesses? Is it bad? Is it okay? Is there a certain threshold?
I think I subscribe to the good debt, bad debt idea. I think you have to ask yourself, what are you going in debt for? If it is an income producing investment, awesome. If it is a flashy expense, probably not. So it just,
going back to those personal mindsets of how we feel about money, because someone could justify the Jag or, you know, whatever the flashy thing is and think it's going to help, you know, help my image. It'll help me, you know, roll with big boys or whatever versus maybe the new tractor or whatever.
Yeah. And so, you know, there are ego numbers in our life as well. Revenue is an ego number. Team size is an ego number. And the ego things that break people the most are cars and houses. Cars are the worst asset you can ever, and it's not an investment. You can call it an asset, and it technically is on your balance sheet if it's a business vehicle, but it is not an income producing asset. And so, you know, for things like that, I personally, because it's those habits that will take us down and put us in a bad spot financially. I like the idea of saving up enough cash to just pay for it in full. You know, for something like, and look, there's no shame in having the Jag. I'm not saying don't go get the Jag. Okay. You are absolutely allowed to have the Jag. Love it, live it, own it. Okay. Also, do it in a way that it's not going to strap you for cash down the road.
Right. Yeah. There you go. Goals.
Yes. Priorities. Yes. Priorities.
And goals. Absolutely. Absolutely. So let's talk about budgeting a little bit. What are your tips for businesses on creating a realistic, healthy budget?
Do it is my first tip, because most people won't. Most people hate the word, but here's why. Let's look at why most people don't like a budget. Most people think it feels restricting. Like they're going to be miserable because they're going to want something and continually have to tell themselves no. That's why most people just avoid budgeting. But I want you to reframe how you view a budget. View a budget as boundaries. All of us need boundaries. Even outside of money, boundaries are what are going to protect your peace. It's what's going to help you say no to things and people that are not serving you, so that you can say yes to the things that are going to serve you and be meaningful in your life. A budget is a financial boundary. And what that boundary is protecting for you is your current financial peace of mind and your future financially free self.
That's worth sticking to.
Yes. Yeah. And you also have to know why you're doing it. Everybody, you got to have a why, like in life, and same thing with money.
Yeah.
Why are you saying no to some things? It's so that you can say yes to this. Why does that matter? For most people, their version of financial freedom, yeah, they're going to have like the car, the house, the trips, all of the things. But more importantly and more meaningful to them are the people that they're going to bring with them when they do this. And that is what your why should be grounded in.
Yeah. And not worry. Not be checking your bank account every day to make sure that we can go out to eat tonight, that kind of thing.
Yeah.
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 How do you guide business owners from overestimating their budget? Like, I'm going to do $3 million next year. How do we know that that's achievable?
So expenses are the easiest thing for us to control as business owners. We can predict and project revenue all day long and come up with 25 different numbers for next year's total revenue, right?
Yeah.
Expenses are the things that we can control despite revenue. So focus on those. Make sure that you're always doing your annual financial housekeeping. I don't care how much money you're making. You should always be making sure that you are running lean. So if that means comparing your insurance provider every single year, and use the rule of 3. I say look up 3 different providers, compare 3 different people. Your telephone and internet bill, your cell phone bill. Make sure that if you have a credit card processor, that you're getting the most competitive rate. Like they're not going to reach out to you and be like, hey, I can save you $100 a month. Do you want me to sign you up? No, they're not going to do that. You have to make sure that you are getting a good deal and negotiating. The most wealthy people that everybody knows are master negotiators, no matter how much money they have. They were very conscious about controlling their expenses because that was the one thing that was within their control. So don't underestimate that, because regardless of how well or unwell you do in revenue in any given year, you are going to have to either expand your expenses and still run lean, or shrink your expenses. Say you have a bad year, you have to know, what can I cut? And when do I have to cut it? So I know that isn't the revenue answer, but I think, again, that's wise. That's what we need to focus on.
Do what you can with what you have right now, and expenses is always what you can do right now.
Yeah.
Yeah, that's great advice. That's great advice. Going back to forecasting that income, coming up with 3 different things. How do you land on the one you want to go with as far as projecting income?
The income number. So I use data. Data can tell us a lot. And I think that's probably another thing that a lot of businesses aren't doing that's incredibly powerful that they should start doing. So some common business KPIs, key performance indicators, these are the needle movers in our business that allow us to stay 10,000 foot view without going into the weeds, but they're going to tell us, hey, you need to go check this out because something's wrong. So that's what a KPI is. Some common KPIs for businesses that also help in projecting revenue in a calculated way, not a guessing, hopeful way, because hope is not a strategy. Number of leads and conversion rate, and your average client value. So number of leads are how many people are reaching out to you, quantifying that. Conversion rate is of the amount of people that are interested and reach out to you, how many of them actually become paid clients. And then your average client value. Now that's going to be different depending on what type of business you are. And you may have multiple different types if you have multiple offerings, but don't make the mistake of thinking you're a unicorn and this doesn't apply to you. Math applies to every business. I can create a calculation for any industry, doesn't matter. This will work for you and it is powerful. So if you know those 3 things right away, and you have been collecting that data for even a year, you can look at that data and identify patterns and trends, and you can create a safe revenue projection for the next year. And, there's different scenarios that you can play with. You can make a safe one and you can make an audacious one, right? But know them both, because you don't want to be audacious, fall short, and now you didn't plan for it.
Right. Right. Because maybe we thought we were being lean with expenses over here and we weren't lean enough.
Right.
Yeah. So when things come up that weren't planned and our budget is blown out of the water, what do you do?
Well, I would start my answer by saying we should be able to know, for the most part, what's happening. That's like, if you have a dog, plan for a vet bill. If you have a car, plan for it to break down. We act surprised sometimes when these expenses come up, but was it really so rare that we couldn't have planned for it? And it's a learning process, right? So, to give people grace that they deserve, just learn from these, right? But generally speaking, it's always a good idea to have at least 3 months of padding in all of your expenses, in all of your accounts, to be prepared for that. Have something set aside, that rainy day fund, so that even surprises can't derail you.
Yeah. I mean, what is your kind of synopsis of this year so far? I mean, we hear of a lot of businesses struggling this year in a number of ways. What is your kind of number one encouragement right now?
It's not the first time and it won't be the last. This is one of those things where we act surprised when 2008 happens or when COVID happens. But if you look again at history, there are patterns. And as business owners, again, we can't be complacent. We have to be prepared for the unpredictable. Because the fact of the matter is, while some businesses are going out of business because they weren't prepared, some are planning to be better on the other side, and some of them are actually thriving while everybody else is in emergency reaction mode.
They've pivoted.
Yes. So I think the lesson in that is always be prepared. Owning a business is a lot. Keeping up with the day-to-day is a lot, right? And there's a lot of value from the past and observing numbers and scenarios from the past. But where very few businesses get is looking in the front mirror. We're always in the rear view mirror, or we're inside the car looking at where we're at now, right?
Yeah.
But the lesson in that is, and there's a book called Traction by Gino Wickman. And Traction is more of a team management, but it's also a leadership strategy. And one of the things that they talk about are quarterly rocks. And so as part of your quarterly things that you do, like your rituals, start thinking futuristically. Ask yourself these questions. What if the stock market crashes? What if prices go up? What if another COVID scenario happens? Because I guarantee you somebody's going to figure it out. And if you give yourself enough time to let your mind go down these rabbit holes so you just have an idea of what to do, you're going to be one of the people that figures it out.
That's excellent advice. Excellent advice. So you mentioned a couple things about software or automation being a key component or a tool in those financial systems. Do you have some that you recommend?
There are so many.
Okay,
I think instead of an actual software, because there's literally 200 softwares for every MailChimp now. But your CRM for sure, which can automate your email newsletters, your calendaring,
Invoicing, hopefully.
Yes, definitely your accounting, which, by the way, I want to give Xero a shout out. So Xero is an alternative to QuickBooks, and it's Xero, not Zero.
Okay.
But that is my favorite accounting software. It's cheaper than QuickBooks, and it's prettier than QuickBooks, and the reports are better than QuickBooks. So I'm not biased. It's actually for the business owner's best interest. But yeah, accounting software, of course, and the lead software. And then outside of that, a task management or a project management software, depending on what industry you're in. Like my lawyers, they use Clio to manage their caseload, right? So depending on what industry you're in. I use one I love called Asana, and it is a project task management software, and it is like my company's Bible. Everything is in there. It's amazing, but I think the important thing is automate as much as you can and get as much out of your head as you can.
Yeah.
We talked about things that will hold businesses back the most. Outside of not knowing how to manage money, the second is delegating. fear of delegating, fear of actually growing. And so using something like Asana to get the things out of your brain and out of your head to create a documented process for someone else to come and follow once you start hiring and delegating.
Yeah, that is a huge challenge, but great advice for sure, for sure. So at what point would you recommend that a business kind of stop trying to be their own CFO in a way and hire someone else?
I want to start with, you had mentioned before, like, I believe that you should be your own CFO. I don't think that that's a role that you should ever abdicate. It's something that you should learn in your business so that you always know how to do it, not just for your business, but because you are the CFO of your personal financial life as well. That is a role in your personal financial life. And for even people listening that don't own a business, in my personal finance program, I tell people, treat your money like a business.
Yeah.
It is your business. Your money is your business. And so once you have learned that for yourself, then yes, delegate it, because you'll know how to manage it and make sure that that person is doing what they should be doing with your money and all of the things. And as far as when to delegate it, it's really when you can afford it. And a fractional CFO is going to cost you something like $3,500 a month on average. So when you can afford it, you can delegate it.
Yeah. Another goal.
Yes, priorities and goals.
Priorities and goals. What would be, your ultimate financial advice, or something that we haven't talked about that you think every business owner should hear?
Profit is not an event. Profit is a habit. What comes quick leaves quicker. Give yourself time. Give yourself grace. I am considered a guru twice over, and I am still learning because things will forever be changing. And financial knowledge is compounding knowledge. Once you know it, you get it, and you'll forever know it. But we're always building on that. So I think that would be like my ultimate advice.
Yeah. One of the things you talked about with the rock, the habits with what was the book called? Traction. One of the things that came up was building trust with your team, especially maybe when things are lean. What is your advice for people? Do you tell everybody how it is, or do you just figure it out and hope they never have to know?
We live at a point in time where leadership is about serving your team and showing humility. Ruling with an iron fist and that whole do as I say era is over with, and it is killing businesses who are still holding on to it. People appreciate transparency, and it actually gets them more invested in the cause. When you enlist your team, and this has to do, and I know this is hard for business owners. It's just like it's hard to delegate and trust somebody else. If you don't trust them, they're going to feel that. And in response, they're not going to trust you either. And so ways that we can show our team that they can trust us and that we trust them are by being transparent. You don't have to show them your whole financial statement. But for example, they should know what the revenue goal is. That's fun to know, right? Some people do like the thermometer thing, like how close are we to revenue? But more importantly, telling them each position, how can you help us make this revenue number? Because it's not just a sales position goal. It comes down to the people who are doing customer service. Like you can help us reach this goal by doing X, Y, and Z in customer service. And everybody's position plays a part in that goal. So I believe in transparency. I have a team of 16. I have only ever had to fire 2 people in almost 10 years. And so I have a team of leaders, and I hire people and they know more than I do. Like it's not uncommon where people will reach out to me and I'm like, I am not the person for that. I need you to talk to so-and-so on my team. And so it's about trust, and it's about showing them and vulnerability, right? Like we're not perfect. And this goes back to our business will only thrive and grow as much as we're willing to look into the mirror and challenge ourselves to truly thrive and grow. I'm not perfect. I've said the wrong things. I've done the wrong things. I have apologized to my team. I can't even tell you how many times, because I'm human. I don't hold myself to the standard of a business owner who doesn't make mistakes and who has all the answers. We're not doing ourselves any favors by holding ourselves to that standard and then trying to project an image that is not imperfect to our team.
Yeah, so good. So good. I hope you have learned so many things, so many great pieces of advice with Chelsea Williams, Money Mastery, her podcast on YouTube, right?
YouTube, Spotify, all the platforms.
All the
Always and never about money.
Always and never about money. Perfect title for everything that we've talked about here today. We're going to have more with Chelsea later this year, class hands-on with businesses. I'm so excited for you to learn more about it. And if you want to hear more, please check out Money Mastery right here in Bloomington, a BBB accredited business. She will help your business be better. Thanks for watching.